Hey, what's up, followers? This is Martin Day Trades, and today I caught a winning trade. Check my MetaTrader 5, and it was to the buy side. Right after the market opened, there was that drop in price, and I got in at, bring up the history. I got in at a 11757.80, and I exited the trade at 11835.5. So that was only a 1.5% gain, which I had my hard TP set at 925, I believe. So I missed out on a whole 100 pips, which is 2%. So, and then the move went all the way to 12,000. At the high was 12,010, and it's at 11,966 right now, but it crossed through that 12,000 mark. This setup, oh, here it is. It was a 1 to 5 risk to reward setup. So guys, I left a big chunk on the table by just not being impatient and exiting the trade early, not even letting it go to its TP2. I see it on the charts here. It never went back to my entry. It did have that spike down, but it tapped the Asian session low. So even then, whoever was getting in at the 70 to 79% fib level, they were risk free even on that pullback. So if someone was getting in at the 79% and got all out at that high, it could have been a TP3 short term move, and then could have re-entered at the Asian session low, which was still above the 62 to 79% fib levels, and could have been support level. So one could have taken 3%, risked another 1%, and then caught this move for a potential 4 let's say 1, 2, 3, 4, an extra 4% in the day. So this could have paid out on 6% day. Everything was bullish. Caught the low right there. I knew that was there because of, okay, let me just go to the chart here. I just started going off my phone, but yeah, so you guys can see here, like, I caught this 1 hour bullish order block. It was ranging in here. I did the Fibonacci retracement tool from where it's from right here to right here. I'm on a, let's go to the 30-minute. Okay, so what I did was I did a oh no, retracement tool. Where is that? From this point up, okay? So I said from here to here, I needed to know how London and Asia were going to play out. So, because it had this, from Friday's move, this impulse up. So I knew that there needed to be a retracement in price from that bullish momentum. So, because it created a bullish engulfing on a higher time frame. So that's how I knew it, right? So once I seen this, I said, well, this could be a London, almost like a London continuation, essentially, because even though it didn't have that move, there was this move, I guess you would call it a bullish New York bullish reversal, I guess, because it did have its fall. I don't really know this. I'm gonna text my mentor right now. See if he gets on the line. Let me see the answers. This is cool, guys, because he's my mentor, FBA Capital, Andre. Yo, what up, Andre? How's the new place? Is that when they activate it? Mm. Oh shit, is that tomorrow? Oh yeah, makes sense. On Amazon, they have pretty those comfortable beds that they have like I'm not sure how comfortable they are, but I hear they have good reviews. Hey, those are the fucking. That's how you gotta get the business going, man. Once you get your setup all set up. Hey, your office is pretty dope, bro. You got the views up there. Oh yeah. Okay. Did you have a chance to look at today's like move? All right then. Oh, okay. 'Cause I had a question, and I don't want to have you look at the charts if you're not trying to do that. But I was like, would today be considered a New York reversal because of the like I'm just trying to like make sure the setups are I'm able to see and say the setup before I take the trade. Yeah, I've seen that. It's taking all the liquidity, especially from last Tuesday's move where it had that big old drop, so I need to get up there eventually. Yeah. Shit, man. I'm doing a video right now on YouTube, and I'm gonna give you a one of the what did I say that? Like a recommendation to you on your channel. I let people know you're my mentor, so I'm trying to get this down. Soak it in, bro. These days are the good days. You've been going to the gym though, right? Okay, shit. It's there. You have that discipline once you hit that floor running again. You know, it's 100% grind. Oh shit, is it locked in like that? Okay. That feeling of, yeah, bro, yeah, dude, fucking locked in. All right, man, take it easy. All right, man, take it easy. Have a good night, and hey, just chill, bro. All right, late. Cool. So yeah, guys, that's my mentor Andre. Really cool person. I consider him a friend, but I guess it's more of like a business relationship where he's doing this for his business to keep growing it, and me too. Like, I have this for my reasons, and you guys, if you watch some of my videos, know I'm a machine shop owner, a diverse shop owner, and you know, one day I want to do tap in and buy some CNC machines, which cost money, but I know that if there's a will, there's a way. You know, eventually that vision should come to pass if certain things play out. You know, but Let's go over here and look at the daily review. So yeah, he said this could have been like a reversal day right here. Previous day, Friday, came into this order block, which I think is a 15. No, I said it was a 1 hour. So we have this 1 hour order block, the last down candle before the move up. And as price started coming down, I knew it needed to catch in this order block. And then I said, well, how far could it pull back on the fib? So I did the fib level to this whole move right here, this whole impulse, and it came down to the 79%. And I should have known that because, like, I've been trading not long enough to have to be more patient to enter right at the 70 or 79%. Entering between the 62 and 70% threw off my risk to reward today, and that's what kind of gave me that urge to exit the trade as this was happening. Because if I would have entered a little lower, let's say down, let's get this out of the way. Refresh. So let's say I entered right at the 70 to 79%, okay? And I'm on the 5-minute, and this is right where the market did its thing. So let's say I did get in right there. Pull this out actually, just because. Okay. So you can see if I would have had a better entry, even lower, right at the, I was there prepared. I got my brother in right between the 70 and 79%. So you could see literally how this move went back right at the end, because there was 9 o'clock, 9:05, 9:10, 9:15, 9:20. Price was falling into the 79% fib level once again. It was going to give us a chance to get in for this fucking long, right? So I was waiting, and then boom, and then 9:30 came and right into the 79% fib level, and I'm like, fuck it, 1%, 1%, right? And then it never came back. I could have actually reduced my risk to the bottom of the order block. Instead of having a 50 pip risk, it looks like I could have reduced my risk to wrong tool. Reduce my risk to about, what is this? To 39 pips, 40 pips, guys. That 40 pips would have been the bottom of the order block, right? And price never went down there because we had that sniper entry. So think about it, guys. Really think about it. Just focus in now on the price action. This happens often, right? So if we can zoom in and see where that order block was, and if it was going to fail, it was going to fail for the rest of the day. There was the previous day low. It had all this stuff lined up, right? If it was going to fail, it's going to fail. We caught the wrong side of the trade, right? But it caught support, guys. Let's even say I got in right down here, right? And that's kind of like where I got my brother in. So let's see. We adjust the risk reward tool. 40 pips, right at the 79% fib level, or I'm actually not right at the 79%. You guys can see that right there. It's a little higher, the entry, which I'm saying, because I seen it do this whole thing right here. So so I got in up here, but imagine what's the risk to reward now, so as it's going through the 800 level, it could catch support or whatnot, but TP2 was right there at 11,824, right? Sniper entry 11,824 was TP2, and we could have moved stop loss up to break even and said, hey, you know what, doesn't matter what happens, let's oh no, but then it moved up to TP3, went and almost tapped TP4. I would have had to take something off the table here, at least 2%. And then as it came back, that fucking, excuse my language, but traders caught this support right here at the Asian session low, and then it came back up, was still below, kind of ranging the 12 a.m. open, right? Because the 12 a.m. open is important if buyers or sellers are going to come in. You can tell by if the 12 a.m. open, if it goes through the 12 a.m. open and starts to range above it, but then fail, it's probably going to fail because as prices above the 12 a.m. open, a lot of sellers are going to come into the market and try to push the market lower. But if price is below the 12 a.m. open, it's very high chance that there's going to be a lot of buyers below the 12 a.m. open to push price higher. So as you can see how price reacted under the 12 a.m. open, all this stuff, the order block, the 9:30 push, you can see it blasted through this 12 a.m. open. If you were thinking about how a daily candle forms, you got to envision that as well. You got to vision the daily candle as it's playing out. Okay, so it created this doji or wick, and now it's creating the body for the day. And I said, well, it's now tapping this previous day high. It's already at TP3. We need to look to scale something out there, right? But then price came back, and then barely tapped the Asian session low and then rocketed off and never came back. If someone held this trade fully from our entry to where price went, it was a 1 to 6.82% today, guys. That's an amazing move. If you took the trade and just held it, that's what having faith is, guys. That's what having faith is, guys. I gotta have, okay, should I change my strategy up then? If that's a good question. It's always good to keep asking yourself these types of questions. Should I change my strategy and say, hey, I'm gonna let this trade play out for the rest of the day, take nothing off the table, and for those days that it goes up to 6%, then secure the bag, right? Or it's gonna have to hit my break even stop loss 0%. But instead of scaling out at 1.5%, 2%, the whole position, and then regretting not letting a position go, why not just let a position go the whole day? The whole day. Because then I can catch a 6% move. Jesus. That'll help me propel my percentages up a little higher. Faster. So I seen the play, guys. Remember, 1 hour bullish order block, 79% fib. Time of day. London held this order block, started creating these little bullish momentum, taking higher highs, creating different market structure. I know a lot of people don't know about market structure, but here's a good example of a change in market structure. You had this lower low, higher low, lower low, higher low, and you find this move right here during London came up, really had a different change in market structure. Then it caught support, came back up, caught support again, didn't take these lows out, so it's creating higher highs and higher lows. And then as soon as this is happening, one can deduce this entry here, pulling a fib, 70 to 69%, right? This whole move, boom, held it. Even doing a fib from this point to this point, London low, the high that it created, you can see that it got right into those 70 to 70%, 79% fib levels. Even on that level, tapped to 70%. So, I think the stronger fib was the one that was created during New York last week. That fib, that price action. And I think this has been a great video. It's been 20 minutes now, guys. I'm gonna let you guys go. Like, comment, subscribe if you guys like the content, you like the breakdown, understanding the reason why I entered where I entered and exited where I exited, and how I can become a better trader, have better entries, have better exits. Oh, and even see here, guys, look at, watch. So now we're in at the 70 to 79%, and I'm over here keeping a 40 pip stop loss. But if we move this to right under the 1 hour bullish order block, right there, right there. This is now 31 pips, guys. What is that? I would be risking. I have my cheat sheet at the shop, but I would be risking somewhere near 12 lots. 12 lots on this trade, risking 1.5%. So maybe about 10 lots, risking 1%. Guys, I don't have that exact value. I have to get to the where I take my day trades at. This is now a 30 pip stop loss. So what did this turn into now if you held it for the rest of the day? It turned into a 1.85 risk to reward, guys, just by knowing where to place your stop loss, by knowing where your entry is going to be. And in this case, if a trader held the whole trade to the end of the day, it never went back to entry. The price never went back to the entry. Let me say that again. Price never went back to that low that you entered. So getting in at those entries, one can hold a break-even trade or a risk-free trade and then have that momentum up, let it do its thing. It feels kind of scary as it goes to TP almost 5 and then comes back down, holds TP1, you know, keep it at the stop loss, guys, at break even, because sometimes these things will go but get close and then come back up. So don't try to be greedy and say, hey, I'm going to move my stop loss to 1% in profit, because it may go back to that price level and take you out of a trade that then moves, you know, up to TP 8.5, right? So imagine holding in a trade, getting in at the best possible time and catching a TP 8.5 at 8.5% in one day trade, risking 1%, but having the optimal trade entry and having the optimal stop loss placement. That's what's going to separate the winners from the losers. The people who missed their entries, messed up their, let's say they wanted this entry and they knew that their stop loss was going to be 30, but then all of a sudden price starts to take off and there, look at, you guys can see how the stop loss is increasing. They would need to enter no higher than 11,762 to keep a 50 pip stop loss under the 1 hour bullish order block. So, you know, that's a very short time frame. All this right here was the moment to enter, and you can tell it was not for long. Let me go to the minute chart. Jesus, for 2 minutes, price was in this range. Two minutes. Wow. Okay, well, I'm gonna let you guys go. Just analyze the charts every day, guys. Do the work, learn it. It's something that happens more often than not. It's crazy to hear me saying that, but the more I trade, the more I just know. And it's not just that I just know how to look for these areas on the charts where buyers and sellers may step in, and then I know where they're going to step in. Then what are they going to target? Okay, well, if that happens, what's a bigger move? If that's a little internal ripple in the play, we can then deduce that if that happens, I can then wait for the price to drip even lower to the whole figure level and catch a bigger expansion for the day. Now it depends on what time of days will happen, during Asian session or London session. They always give the road on the map of what's going to happen, and more often than not, if you're not comfortable taking those trades, then you need to stay out the market at a certain point, because the only way to really win is to play. But with this move, you know, let's say a day trader did catch an 8.5% move, they may just want to risk 0.5% for the rest of the week, 1%. They're really good at what they do, and then only be really conservative with their trade setup. It would have to be an obvious trade setup for them to enter a trade, because they're up 8.5%. What's 8.5% of a 100K account, which 100K isn't really that much, that's 8,500, right? So what's 8.5% of a 200K account, you know, you can, that's $17,000. So it could be any dollar amount. What we're doing is trading ratios, right? And you have to know your trade plan going into a trade, because once there's no trade plan, us as Homo sapiens, we go crazy. We start to panic. We start to FOMO, start to get vengeful that someone else is winning, you know, like, but with a trade plan, that gets rid of all of that, and you stick to it because we're disciplined, right? So remember, 1% max, guys. If you have a gut feeling and you waited 30 minutes after you entered your first trade, look for a second trade. But just remember, there's always just that one moment in time, and once you miss it, you miss the optimal trade entry. There's not really gonna ever be a better time to have gone in. So like, comment, subscribe, tap in for tomorrow's day trade NAS100 review, and keep you guys posted.